Hey, it's Michael Saul, but everyone calls me Tiny, so you can too. And this is the market video for the week of April 21st, 2014. So let's take a look at what happened last week. It was a short week, but as you could see, the market moved up every day. Now on Thursday, the 17th, it didn't move up much, but it did wind up closing green. And the deal is, until we get over this high on April 10th, we are, in my opinion, susceptible to move back down and retest these lows from where the bounce came from. Now we're back over the moving averages on the S&P 500. That's a good sign, but this was a pretty nasty candle. Now, just because we get above it doesn't mean that we have to go to new highs, but in my opinion, it puts the market in a better position to do so, because it'll clear up this nasty candle. Still has to obviously get through this nasty candle as well, but above the short-term moving averages, above the 50% point of this candle. All right, we just got to get above these highs from April 10th. They come in at 187.17. The Dow, okay, similar. You can see here, they still have the highs from the 10th. The NASDAQ, though, there we go. Okay, the NASDAQ lagging. And the NASDAQ has been lagging. Got the 20 EMA to get through, and then you got that as well as the 50-day moving average. Check the mid-caps quick. Okay, similar. And then the Russell is also lagging. So the Russell and the NASDAQ and also the mid-caps, they are lagging behind. And as I said, I believe, I don't know, a week ago, a couple weeks ago, even if we do get a bounce, the fact that the NASDAQ and the Russell are lagging means that the longer term implications are, just not bullish. So even if the broad market can get to a new high here, if it gets, if we clear the highs from the 10th, if the new highs would then be targeted on the broad market on the Dow. I mean, if the NASDAQ and the Russell don't follow, then it could be a short-lived high. Okay. Also, it's possible that we put in head and shoulders here, with this being actually the left shoulder. This could be the left shoulder. We could come up and form a head from here and then a right shoulder. That's also another scenario, but right now it's one step at a time here. Now, for the coming week, I am going to give the benefit of the doubt to the bulls because, yeah, it was a holiday week. Yeah, it was a option expiration week, but the bulls still did the work. They still got us to go higher here, and they still got us above the short-term moving averages, like I said, at least here on the bull market. The broad market and the Dow. A little Freudian slip there with bull market. So I am going to be watching for weakness, for buying opportunity. Again, I know I've said it. I will repeat it again. The April 10th highs, they are going to be key. If we get through them, then I am going to be looking for a test of new highs, if not a move to new highs, at least in the broad market and the Dow, okay? If it stalls out up here or if it breaks it and then comes back in, then, like I said, we are susceptible to continue this little pullback and actually turn it into maybe a deeper pullback into a correction, okay? So let's recap. Good week last week, above the short-term moving averages. It was holiday shortened. Okay, April 10th highs are going to be key. NASDAQ, Russell, and mid-caps are lagging, which means that if they do not get into gear, even if we do go to new highs on the broad market and the Dow, it could be short-lived, and it would be a non-confirmation, and we have to be very careful there. All right, any questions? Tiny@stockmarkettrendsex.com. Have a great Easter if you are celebrating. If not, have a great Sunday. I will talk to you in the video next week, or you can always sign up for the daily email. I will leave the link in the description below. Okay, have a great trading week. Talk to you soon.